Welcome back to Quantreef. Bitcoin's trading right around 63,586, sitting almost directly under a big liquidity wall and a key fib level at the same time, which is exactly why this zone matters. Today we'll walk through liquidity, support and resistance, VWAP, Fibonacci, fair value gaps, positioning, and where the next several hours likely take us. Let's get into the chart. Price is at 63,586, wedged between a resistance cluster near 63,670 and 64,375, and support down near 63,147. The trend and structure red comes in around 69, which leans constructive, but the broader macro regime score sits in the low 30s, dragging on conviction. Structure strength on the chart itself is rated low, meaning neither buyers nor sellers have really asserted control yet. This is a chop zone, not a trend. Price is holding just above session VWAP at 63,266, which is a short-term positive. Buyers are accepting value slightly higher intraday. But zoom out to the anchored VWAPs from the recent swing high and swing low, both sitting up near 64,300 to 600, and price is still trading beneath them. That tells you the bigger picture hasn't flipped. Sellers from the last leg down still technically control the higher timeframe average. The liquidation map shows a large resting pool right at 63,778, barely 0.33% above current price, carrying well over $3.5 billion in notional. That's the dominant wall on the board. Downside, there's a smaller pool near 62,167, about 2% away, holding roughly $1.5 billion. With 70% of the pressure sitting upside versus 30 below, price has an obvious magnet just overhead. Markets tend to run at the fattest pool of resting stops before deciding their real direction, so don't be surprised if this gets tagged first. Nearest resistance is 63,672 on the 4-hour, then 64,374 above that. Nearest support sits at 63,147, backed by 62,972 on the daily. Given the liquidity stack just above, resistance is the more likely test first. A clean break and hold under 63,147 would be the tell that flips this from a squeeze and fade setup into something more genuinely bearish. Above price, there's a 4-hour bearish gap from 64,012 up to 64,172, less than 1% away, and these have historically been revisited over 90% of the time. That's a real magnet. Another sits a bit higher near 64,500 to 669. The daily gaps further up near 70,000 are much lower priority, with revisit odds around just 14%. Below price, there's an unfilled 4-hour bullish gap from 62,867 to 63,462, sitting less than 1% under current price. That's the level a pullback would likely reach for. Using the daily swing from 61,778 up to 66,938, price is sitting almost exactly on the 0.618 retracement at 63,749, barely 0.25% away. That's a tight confluence with the liquidation wall and the 4-hour resistance, 3 separate reasons for sellers to lean on this exact area. If it gives way, the 0.5 level near 64,358 becomes the next fib to watch. The layered read here is genuinely mixed. Volume and liquidity scores strong at 82, showing real size trading into this zone. Institutional positioning reads a healthy 68, and trend and structure near 69 leans bullish. But macro regime is weak at 33, order flow and liquidity map is soft at 34, and crypto relative strength is only 43, all dragging the other way. When strong volume and institutional flow fight against weak macro and thin order flow underneath, you get exactly what the grade says, neutral. Readiness sits at 81, but blockers like an adverse BTC-ETH tape and RSI chase risk keep this from being a clean signal. Retail is 66% long, and top accounts are almost identically positioned at 66.6% long. The crowd is leaning the same direction here. Long volume over the last 4 hours also outweighs short volume by a decent margin. When everyone stacked on one side like this, the more violent squeeze potential sits to the downside. A break of support would trap a lot of the same longs at once. The highest probability path in the next several hours is a push into that 63,778 wall, which lines up with the 0.618 fib and the nearby bear FVG. Reach odds on that level sit near 80% over the next day. If buyers actually push through and hold above the 64.0 to 64.200 gap, 64.375 becomes the next magnet. But with macro weak and the underlying order flow score soft, the more likely outcome is a sweep of that liquidity followed by rejection, sending price back toward the 62.867 to 63 for 62 gap and the 63.147 support. A clean loss of that support opens the door towards 61.777, though the downside pool itself only carries about 22% odds of being reached in the same window. The bullish case needs a 4-hour close back above 64.172, reclaiming that gap with volume, and it's invalidated on a slide back under 63.147. The bearish case wants to see a rejection wick at 63.778 with a lower high forming, confirmed by a break of support, and it's invalidated on a strong close back above 63.672. Either way, risk gets framed around these structural pivots, not around guessing the exact top or bottom. So we're sitting right at a decision point. Whichever side actually takes that liquidity above or below is probably what sets the real tone for the next move, not the wick itself. If this kind of breakdown is useful to you, drop a like and subscribe, it genuinely helps the channel. And if you want this same 9-layer structure, probability, and liquidity red running across more than 100 coins around the clock, Quantreef offers a 7-day trial at quantreef.com. As always, this is for educational purposes only, not financial advice.